We need to align across regions before the launch. Cultural sensitivity is critical in cross-border negotiations. How do we localize the strategy for the APAC market? Time zone differences are slowing our decision cycle. Let's establish a global governance framework. We must respect local business etiquette in every market. Our subsidiaries operate with significant autonomy. We should standardize processes while respecting local nuances. How are we managing currency exposure this quarter? Cross-cultural training is now mandatory for senior leaders. We're expanding our footprint into emerging markets. Let's leverage our global supply chain more efficiently. Compliance varies significantly across jurisdictions. We need a unified brand voice across all geographies. Our regional headquarters drive strategy in EMEA. Geopolitical risk is reshaping our investment thesis. Could you walk me through the regulatory landscape there? We're consolidating operations under one global platform. Effective cross-border communication requires patience. Let's benchmark against best-in-class global peers. Due diligence revealed several red flags in the target. The acquisition is expected to be earnings accretive. We've signed a non-binding letter of intent. What's the projected synergy from this deal? Post-merger integration will take 18 months. We need board approval before proceeding. The valuation multiple seems aggressive at this point. Let's structure this as a stock-for-stock transaction. The deal is subject to regulatory clearance. Cultural integration is often underestimated. We've identified meaningful cost synergy targets. Could we revisit the earn-out structure? Their balance sheet is stronger than we expected. Retention of key talent is essential after closing. We're conducting a thorough quality of earnings review. The deal closed at a premium of 30%. Let's align both leadership teams under one vision. Working capital adjustments are still being negotiated. We'll carve out the non-core business unit. Integration milestones are tracked weekly by the steering committee. Let's revisit our long-term strategic priorities. Our North Star metric is monthly active users. We need to cascade KPIs down to every department. What's our competitive moat in this segment? We're shifting from output metrics to outcome metrics. Strategic execution is where most companies fall short. Let's set quarterly OKRs aligned with the annual plan. Our portfolio needs needs more disciplined capital allocation. We should sunset the underperforming product line. Our growth strategy hinges on 3 core pillars. Let's pressure test these assumptions with the team. Operational excellence is non-negotiable. We're tracking a healthy customer lifetime value. How does this initiative move the needle on revenue? We need a clear line of sight to the targets. Let's run a scenario analysis for the downside case. Margin expansion remains our top financial priority. We're building a sustainable competitive advantage. Could you quantify the business impact of this pivot? Strategy without execution is merely an aspiration. We delivered solid results across all key metrics. We're raising our full-year guidance. Free cash flow grew double digits year over year. Let me hand it over to our CFO for the financials. We remain confident in our long-term thesis. We'll open the line for Q&A shortly. Our balance sheet remains exceptionally strong. We announced a meaningful increase in the dividend. We're returning capital to shareholders via buybacks. Let me address the analyst question directly. Top-line growth accelerated in the second half. We're committed to disciplined capital deployment. Headwinds in FX impacted reported results. We expect margin expansion to continue next year. Let's turn to the outlook for the next fiscal year. We're seeing strong momentum in our subscription business. ESG remains central to our investment narrative. We delivered earnings ahead of consensus expectations. We'd be happy to follow up offline on the modeling. Thank you for your continued support and confidence. Great leaders empower their teams to make decisions. We need to foster a culture of psychological safety. Lead with empathy and hold a high bar. We value candor and constructive disagreement. Accountability starts at the top of the organization. We're building a high-performance culture. Let's recognize team members who model our values. Inclusive leadership drives better business outcomes. We invest heavily in leadership development programs. Authentic leaders walk the talk every day. Our culture is our most enduring competitive edge. Could you share feedback on my leadership style? We promote from within whenever possible. Servant leadership puts the team's success first. Let's address the elephant in the room. Trust is built in drops and lost in buckets. We need to break down silos across functions. Difficult conversations are a leader's responsibility. culture eats strategy for breakfast every time. We need a comprehensive risk assessment by next quarter. Let's identify the key risks on our heat map. Our enterprise risk framework needs an overhaul. We must mitigate exposure to currency fluctuations. What's our contingency plan if the supplier defaults? The board has raised concerns about cybersecurity threats. We need to stress test our liquidity position. Operational risk is rising across the supply chain. Let's quantify the downside scenario in detail. We're hedging against volatility with derivatives. Our risk appetite is clearly defined in the policy. We need to escalate this issue to the audit committee. Insurance coverage should be reviewed annually. Reputational damage can outlast financial losses. We've implemented robust internal controls. The likelihood is low, but the impact is severe. We must avoid concentration risk in our portfolio. Business continuity planning is non-negotiable. Let's run a tabletop exercise next month. Risk management is everyone's responsibility. Let's revisit the indemnification clause in Section 8. The liability cap should be tied to annual fees. We can agree to those non-compete terms as drafted. Please flag any material adverse change provisions. The governing law should be New York jurisdiction. We need a mutual confidentiality agreement first. Could you walk us through the termination provisions? Intellectual property rights remain with the licensor. Let's add a force majeure clause to cover disruptions. We're prepared to walk away from the deal. The MO is non-binding except for confidentiality. Our counsel has flagged several red lines. Can we negotiate a longer cure period? The arbitration venue should be neutral territory. We're open to a phased approach on milestones. This warranty period is too narrow for our needs. Let's strike that provision and substitute new language. The closing is conditional on regulatory approval. We need representations and warranties insurance. Let's split the difference and close this out. Our brand equity has grown substantially this year. We need a consistent narrative across all channels. Let's craft a compelling brand story for the launch. Our messaging should resonate with target demographics. We're repositioning the brand for premium markets. Let's prepare a holding statement for the press. We need to get ahead of handle the media briefing. Brand authenticity drives long-term customer loyalty. We're seeing strong earned media coverage this quarter. Let's amplify our message through key influencers. Our share of voice has overtaken the competition. We need a robust crisis communications plan. Storytelling is at the heart of modern branding. Let's audit our brand guidelines for consistency. Our purpose-driven campaign strikes a chord with consumers. We must stay on message in every interview. Sentiment analysis shows positive brand momentum. Let's leverage thought leadership to build credibility. A strong brand is our most valuable, intangible asset. Our digital transformation roadmap spans 3 years. We're migrating legacy systems to the cloud. Data is the new currency of business. Let's leverage AI to automate routine tasks. We need to break down our data silos. Our omnichannel strategy creates seamless experience. We're rolling out a company-wide upskilling program. Cybersecurity must be embedded by design. Let's adopt an agile delivery methodology. Our digital maturity assessment shows clear gaps. We're investing in machine learning capabilities. Customer experience is the new battleground. Let's pilot the solution before scaling enterprise-wide. We need to digitize the end-to-end customer journey. API first architecture accelerates integration. We're building a single source of truth for data. Generative AI is reshaping every business function. Let's prioritize use cases with measurable ROI. Change management is half the battle in DX. We must reimagine the operating model from scratch. Industry consolidation is accelerating across the sector. Headwinds from inflation are squeezing margins. We're seeing a clear shift towards subscription models. Disruptive entrants are challenging incumbents. ESG criteria are reshaping investor priorities. Demographic shifts will reshape demand patterns. Geopolitical tensions are reshaping supply chains. The market is bifurcating between premium and value. Emerging markets offer significant upside potential. Regulatory tightening is on the horizon globally. Our analysts forecast low single-digit growth. Sustainability is becoming table stakes for buyers. Margin compression is squeezing the entire industry. Total addressable market is expanding rapidly. Let's benchmark against best-in-class peers. The S-curve suggests we're approaching maturity. Cross-industry convergence is creating new opportunities. Our forecast assumes a soft landing scenario. Talent scarcity is a structural challenge industry-wide. The next wave of innovation will redefine the industry. I'd like to call this board meeting to order. May I have a motion to approve the minutes? The motion has been seconded and is now open for discussion. All in favor, please signify by saying A. The resolution passes unanimously. We have a quorum present to conduct business. The board recommends approval of the proposed dividend. I'd like to yield the floor to our CFO. The audit committee has signed off on the financials. We need to disclose this to our shareholders promptly. The proxy votes have been tallied and verified. I move to table this discussion until next quarter. The chair recognizes the independent director. Our fiduciary duty is to maximize shareholder value. We've engaged with our largest institutional investors. An activist investor has taken a stake in the company. The succession plan is well underway. We're seeking ratification of the executive compensation package. The meeting is adjourned until further notice. Minority shareholder concerns have been duly noted. Our overseas subsidiary reports directly to headquarters. We need to align local operations with global strategy. Cross-border governance requires careful calibration. We're rolling out a global ERP across all regions. Localization is critical to market acceptance. We need to navigate transfer pricing regulations carefully. The country manager has full P&L responsibility. Currency hedging protects us from FX exposure. We're standardizing reporting across all entities. Repatriation of profits requires tax optimization. We've established a regional shared service center. Cultural intelligence is key to managing global teams. We're piloting the model in Singapore before scaling. Local talent development is a strategic priority. Compliance varies significantly by jurisdiction. We're consolidating back office functions globally. The expat assignment is a 2-year rotation. Geopolitical risk requires centralizing decision-making to the regions. Headquarters provides oversight without micromanaging. We're exploring a strategic alliance with the market leader. This partnership creates clear synergies for both sides. We've signed a memorandum of understanding. The joint venture will be incorporated next quarter. We're entering into a co-development arrangement. Both parties bring complementary capabilities. Let's structure this as a revenue sharing model. The exclusivity clause runs for 3 years. We need to define clear governance structures up front. The licensing agreement covers all major territories. We're building an ecosystem of trusted partners. The channel partner will handle distribution regionally. We've negotiated favorable terms in the master agreement. The IP rights will be jointly owned by both entities. We're aligning incentives through milestone payments. An OM agreement gives us scale immediately. The strategic fit between our companies is exceptional. We've defined an exit clause in case of underperformance. The reseller network expands our footprint dramatically. Trust between partners is the foundation of any alliance. We need to activate our crisis response protocol immediately. The compliance team has flagged a material concern. We're conducting an internal investigation into the matter. Regulatory authorities have requested documentation. Our legal counsel advises full cooperation. We must preserve all relevant records and communications. The whistleblower hotline received a credible tip. We're issuing a public statement to manage the narrative. The data breach has been contained and reported. We're conducting a thorough root cause analysis. Reputational risk is our paramount concern. We've engaged external counsel for an independent review. Anti-bribery training is mandatory for all employees. We're cooperating fully with the regulatory inquiry. The remediation plan addresses all identified gaps. We need to strengthen our internal controls framework. Sanction screening is now part of every transaction. The board has been briefed on the contingency plan. We're enhancing third-party due diligence procedures. Lessons learned will be embedded into our policies. We're rolling out a new performance management framework. The reorganization will flatten our hierarchy. Change management is critical to successful transformation. We're shifting to a competency-based compensation model. Succession planning ensures leadership continuity. Employee engagement scores have improved significantly. We're investing heavily in upskilling and reskilling. The cultural transformation requires sustained leadership commitment. We're piloting a 4-day work week across select teams. D&I initiatives are integrated into every business unit. We're moving to an agile operating model company-wide. Voluntary attrition has dropped to a 5-year low. The talent review identifies our high potential leaders. We're aligning incentives with long-term value creation. Hybrid work has become our permanent operating model. We're benchmarking compensation against market percentiles. The new operating model empowers frontline decision-making. We've introduced 360-degree feedback for all managers. Workforce planning anticipates the skills of tomorrow. Our employer brand is a key differentiator in talent markets. Our product roadmap is aligned with long-term strategic priorities. We're doubling down on our flagship product line. Product market fit remains our top validation milestone. We've adopted a platform-first approach to scale. The MVP enables rapid customer feedback cycles. We're sunsetting legacy SKUs to streamline the portfolio. Customer jobs to be done drive our prioritization. We're accelerating time to market through agile squads. Our pricing strategy reflects perceived value, not cost. Modular architecture lets us iterate without disruption. We're expanding the product portfolio into adjacent categories. The feature backlog is groomed against strategic OKRs. We're embedding AI capabilities across the product stack. Our North Star metric is weekly active users. We differentiate through superior user experience. The build versus buy decision hinges on strategic fit. We're rolling out tiered subscription plans globally. Product analytics inform every roadmap decision. We're scaling cross-functional pods around customer journeys. Strategic bets on emerging tech protect our long-term moat. ESG considerations are embedded in every capital allocation decision. We've committed to net zero emissions by 2040. Our sustainability report aligns with TCFD recommendations. Climate-related financial disclosures are now standard practice. We're decarbonizing operations across our value chain. Stakeholder capitalism is reshaping how we measure success. We're investing in renewable energy across all facilities. Materiality assessments guide our ESG priorities. We're tying executive compensation to sustainability KPIs. Our supply chain is being audited for human rights compliance. We've issued our first green bond to fund clean projects. Circular economy principles guide our packaging redesign. Scope 3 emissions disclosure is our next reporting milestone. We're advancing inclusive hiring across underrepresented groups. Our community investment program impacts local livelihoods. We're aligning disclosures with ISSB global standards. Biodiversity is emerging as a board-level priority. We're transitioning to science-based emission targets. Responsible governance underpins our long-term license to operate. Our ESG ratings have improved across all major indices. We delivered another quarter of double-digit revenue growth. Operating margins expanded by 120 basis points year over year. Earnings per share came in ahead of consensus estimates. Free cash flow generation remained robust this quarter. We're raising full-year guidance based on strong momentum. Recurring revenue now accounts for the majority of total sales. Headwinds in EMEA were offset by strength in Asia Pacific. Gross margin benefited from favorable product mix. We returned $1.2 billion to shareholders this quarter. The book-to-bill ratio signals continued backlog strength. Constant currency growth was up 14%. Customer acquisition costs are trending favorably. We're on track to exceed our full-year revenue target. Net retention rate improved to 188%. Adjusted EBITDA margin reached an all-time high. We're seeing strong leading indicators heading into Q4. Cost discipline drove meaningful operating leverage. We're disclosing segment-level performance for greater transparency. The Investor Day will outline our medium-term targets. Year-over-year comparisons reflect broad-based momentum. Thank you all for joining today's press briefing. I'd like to address that question directly and on the record. We stand by the facts as outlined in our statement. Let me clarify the timeline of events for the record. We take this matter extremely seriously. I'll defer to my colleague on the operational specifics. We're being fully transparent with all stakeholders. The investigation is ongoing, and we'll share updates as appropriate. I want to emphasize our commitment to customer trust. We've taken immediate corrective action. Let me push back gently on that characterization. I'm happy to take a few more questions before we close. Our official statement will be posted to the newsroom shortly. I'd rather not speculate beyond the verified facts. We welcome scrutiny and value independent oversight. frame that with the broader context. Customer safety has always been our top priority. We're cooperating fully with the regulatory authorities. I appreciate the question, and here's our perspective. Thank you. And we'll follow up with detailed Q&A in writing. Today marks a defining moment in our company's journey. Our vision is to redefine the industry over the next decade. Every decision we make should ladder up to our purpose. I want to thank our teams for their extraordinary execution. We're building a company that endures across generations. Our culture is the ultimate competitive advantage. We will lead with empathy, integrity, and bold ambition. The next chapter requires courage and clarity of conviction. Innovation is not a project, it's how we operate every day. Customer obsession will continue to anchor every priority. We win when our people grow faster than the business. Our long-term ambition demands discipline, short-term execution. I'm asking each of you to think like an owner. We will measure success by the impact we leave behind. Trust is earned in drops and lost in buckets. Let's stay humble, hungry, and relentlessly curious. Together we are stronger than any single market force. Our purpose is bigger than any single product or quarter. Let's go build the future our customers deserve. Thank you for believing in this mission and in each other.